Hi, Sonia.
Hey guys, I'm starting to admit everyone, so welcome, welcome.
Yeah.
I don't know why I didn't set it up as automatically admit, but I didn't, so.
Hello.
Hello,
Let's
welcome,
see.
welcome, guys.
And
I'm just admitting everybody in right now. Not sure why I didn't do that. Let me see.
Hello, you look beautiful. Look at you.
Thank you.
Woo-hoo. You look amazing.
Thank you. You guys
I
are
want
always
to know
so
who's
nice
behind
to me.
Runway Platform.
Everybody's always so nice to me. Hold on, let me see. Enable waiting room. And we're admitting everybody right now, guys. So hang tight. Welcome. But I have about 37 registered. So I'm going to see how many actually show up. Can everybody hear me okay?
Yep.
Some of you guys are unmuted.
Yep.
Hey,
Yes,
Alex.
we can.
Some of you, feel free to turn on your video if you want. If you don't want to turn on your video, that's okay too. This is being recorded, just so you guys know. Hello, hello. Let me see. I don't know if I need to go into the waiting room again. I'm refreshing, guys. Thank you guys I know it's so close to the holidays right now and everybody's starting to do holiday shopping and do all that stuff. So I really appreciate you guys being here. But we're going to start in a couple of minutes because everybody's still getting here. So I'm logging everybody in. Hello, hello. Can everybody hear me okay? I want to make sure. Just nod your head if you can. Thumbs up if you're muted. Okay.
Yep, I can hear you.
Okay, good. It's funny, I couldn't pick a place to come do this. I couldn't get to my office on time. My house would have had a bunch of dogs barking. So I ended up here. I'm at my brother's deli in Newport Beach. It's just so funny. I'm like after hours partying in the deli right now. So here we go. There's some more people showing up. So we are at about 12. So we're about a third of the participants. We're at 6:02. Okay, so run, get some water, go to the bathroom, what you got to do. I'm going to start at 6:10 just to give everybody an opportunity to jump on. Okay, guys? So if you're having connection issues, anything like that, try to resolve that. Right now, we are at 12 participants. Let's see, is there anybody else in the waiting room? Looking to see if there's anybody else in the waiting room. Make sure everybody can see me. Don't we love technology? I love this. I don't do enough webinars. I'm gonna start getting addicted to these things. All right, let me see if there's anybody else jumping on. So I'm glad everybody was able to access the link. I wanted to make sure that that link was working. I kept making sure that I sent the right one in email and in text. Let me see who else. Got somebody else in the waiting room. Hold on, guys. I should do one of those timers on the screen, huh? Like 6 minutes, counting down, right? Until we get started. There's another one. Another one. Welcome, guys.
Recording in progress.
So we're up to 14 right now. Again, you're welcome to mute yourself at the beginning. We'll go through the format right now of how I'm going to be presenting, and then there will be an opportunity for questions and answers at the end of it. So if you'd like to take notes for the questions that you want to ask, definitely do that. If you're interested in what we talk about today, I will be sending you this presentation. So if that's something that you're interested in, you don't have to write down everything that I'm talking about. You're going to be able to get it emailed it over to you if there's some interest for you. We still got more people showing up, guys. Hold on. So we're 5 minutes, 5 minutes. Thank you to everybody who was here on time. I don't know if you guys know this, but I'm doing the 75 hard challenge, and today's like day 12, I think. If anybody has done it, you guys understand. Discipline challenge. It's been awesome. But after this webinar, I have to go work out. So that's going to be fun. Hey, Eric, welcome.
What's up, Sonia? Congratulations, whatever you're doing. I bet it's amazing.
I like that you're congratulating me and we're not even sure what we're doing yet. Yeah.
Yeah, whatever it is, I'm sure it's big. Merry Christmas.
Love that. I love that. So we're going to get started at 6:10 just because I want to give everybody a chance to jump on. So that's what I was telling everybody. Grab some water, go to the bathroom, do what you got to do. It is being recorded, so you feel free if you want to do video or if you want to not do video, you can unmute yourself. We will be doing, or I will be doing the presentation and then taking questions at the end of it. And again, if you want to take notes, that'd be great. But you don't need to write everything down. If you're interested in the opportunity that we're going to present, then you can definitely get everything emailed over to you, so you don't have to write everything down. Hi, Miss Alicia. I just saw that you just came on. So we are at about 17, which is pretty typical. About half of the people show up that register for anything, right? So I think we had 37 or 38 registered. So we shall see what we end up with right now. Is somebody really, really good at this? I just want to make sure that if I disable the waiting room, do people just come in automatically? Does somebody know that can unmute themselves and tell me?
Probably, most likely. I mean, I think that's what the waiting room is for.
That's what I'm saying. So if I disable it, it should just automatically, right?
Yeah, I think they automatically just come in.
All right, let me disable that then. Let's see if anybody jumps in right now, and we'll see if that happens. So we're at 17 right now. Want to make sure. Let me check real quick if anybody else registered last minute. I know a couple of ladies did, and I got them the I know Alicia and a couple of other ladies did last minute, so I got them the link. Let me make sure. Yeah, we're still at 37. Okay. That means at least everybody who registered got the link from me at this point. All right, guys. Un minuto. You know how much longer this would be if I had to do it in English and Spanish? We do the bilingual version of this.
Spanglish.
Spanglish. I know, right? Ya merito, ya merito. I did send a video in Spanish to friends and family to invite them to this. So I told them it was going to be in English, but I would happily sit down with them and explain everything that I'm going through in Spanish, no problem. So I'm not seeing anybody else jump on. Hopefully me disabling that waiting room didn't do anything except allow people to come straight in. Hope so. All right. Well. Okay. Well, welcome guys. It's 6:10, so let's get started. They can jump in. So I really appreciate this. The first time that I'm doing this in this format, and I'm going to be sharing my screen with you. So as we go through this whole thing, for those of you who don't know me very well or don't follow me, oh yeah, see, that went in automatically. Okay, great. So my name is Sonia Ramirez on Instagram and all my socials. I go through Multi-Unit Queen. Gave myself that moniker. I gave that to myself. I've done over 100 projects now. We're going to go through my experience and why I'm doing this. Had a partner that I was partnered with for a very long time, learned so much through my mentorship, and now launching out on my own. And this is really, really exciting for me to share with you guys the opportunities that I'm bringing to the table. Oh, there we go. Now people are starting to sign in. Okay, so is everybody ready? Give me a thumbs up. Give me a head nod or something. It feels weird to be like just talking into the abyss here. Yeah, are we good?
Yeah, let's do it.
All right,
Ready.
here we go. So let me share my screen with you guys. Boom, boom. Alrighty, hold on. As soon as I can get it back on here, let's see here. Oh, we love technical issues here. All right, here we go. Okay, so give me a thumbs up, everybody, or unmute yourself real quick. I want to make sure everybody can see it.
I can see
Yes.
it.
You can see it?
Yep.
Okay. Is this big black screen on top? Hope not. Okay. So again, welcome everyone. So the reason that you're here is because of who I
Please leave your
am.
message for 3, 1.
Are we good? I just heard something. Okay. So I launched a new company called Queens Venture Capital, and I'm partnered with a company called 53 Case LLC. They are a very seasoned developer. So we're based out of Southern California. We're a real estate investment company, and we specialize in ground up new construction, partnerships, rehabs, and retail sales, right? So we focus on identifying highest and best use for development opportunities. And this is what I'm always preaching on my socials, right? We find these properties at a significant discount or at a price point where other people don't see the potential for this, right? And we force appreciation, we build, and then we resell in the open market, obviously while providing value to our investors to make great returns on these investments, right? So this partnership has been years in the making, individually, each of our companies have done hundreds of projects. This is when we went over the numbers, I was really amazed at this because you don't think about the big picture of what you do until you really start putting the numbers together. And when we actually put the numbers together, I was like, wow, I didn't even realize we did that much, right? So now we've joined forces and we're gonna rocket our growth, scale our business model, and we're offering exciting development opportunities, normally only reserved to like a wealthy, connected investor, right? If you've never been part of a ground up new construction, you know that it's a small circle of people who kind of keep doing deals together. And we wanted to expand that circle and offer this opportunity to everyone else. So myself, like I said, I am the CEO of the Queens Venture Capital. I focus on acquisition, on wholesale, private investors relations, retail sales, tenant relocations, and project feasibility, highest and best use. And then 53 Case LLC, my partner, they head systems and operations, permitting and construction. They have their general contractor's license, they have vendor relations, and they do employee training. So together, we have successfully done ground up projects, fix and flips, and entitlement projects throughout the almost decade that we've worked together. And we have completed multiple real estate transactions. This is kind of what blew my mind over the last decade. I've been doing this for 8 years. He's been doing this for longer than I have. We have transacted over 100 million in real estate project and have raised over 70 million in private investor capital for these projects, giving investors double-digit returns on their investments. And we're so excited to continue the growth and contribute to, you know, our local economy here and to the neighborhoods that desperately need housing. And we also, as evident with all of you guys, are part of some great networking groups that we kind of lean on each other for expertise, and we share deals and we share knowledge. A lot of you have had me speak at your events. You know, it's been awesome. So we have a great community of people around us at this point. So that's who we are. So this is our goal as investors and developers and for our investors, right? Our main goal is to make ground up new construction investment accessible to everyday people. Again, it's the number one question that I get in any networking event that I go to is, how do you get into ground up construction? How is it that you do it? Most of the time, it's an echelon of going from wholesaling to flipping and then kind of getting into construction, you know, ground up new construction, either of homes or multifamilies. That's kind of the trajectory that most people go through. So we said, what if we can bring an exciting opportunity for people to invest in this vehicle, and they could be anybody, right? Whether they're in real estate or they're not in real estate. The majority of you guys are. So you're going to know a lot of the terminology that I'm using, but a lot of people are not in real estate and they've always wanted to, but they either don't have the access, don't have the connections, or just don't know how to get started. So we want to make it transparent, open communication, and really super simple for anybody to say, I want to invest in real estate. And that's what our hope is to connect with everybody and connect you guys to the right investment vehicle for your hard-earned money, basically. And then we believe that our company aligns with the goals, and it's a great opportunity for you to consider. So now that I've kind of given you my pitch of who we are and why you should be investing with us, I'm going to go over some of these projects. And again, this is the way that I'm going to go. I have 2 projects right now under contract. So I am going to go through what the projects are, what the numbers look like, and what the investment opportunity is attached to each of them. At the end of this, we'll go, like I said, maybe 20 minutes of anybody who wants to stay out in Q&A. If you have any questions, write them down, like I said, and then we'll go over them at the end. And then we will talk about the bonus exclusive opportunity for a mastermind at the end of the presentation. So if that's something that you think you want to partake in, definitely stick around to the end. Okay. So here we go. Project number 1. Okay. Again, give me a thumbs up or something, guys, because it's so weird to be talking and nobody, I don't see anybody. Especially because I'm sharing a screen. So I'm like going back and forth. So
Doing great.
and I do tend to talk really fast. Okay. So I'm going to try to slow down a little bit. I get excited about everything and I start going through numbers like crazy. So again, if you have any questions, please keep them to the end, but I will try to slow down. Okay, so here is our first opportunity. The first opportunity is 7811 Town Avenue. And if you guys have your phone out or anything, you guys can Google it. You guys can see where this is. This is 90003, which is South LA, okay? So South LA is where we're looking for this. And that is a current picture of what is currently on there. So this is the investment opportunity. This is an example of what we've built in the past, right? So the question is, would you be interested in funding a ground up new construction project for Queens Venture Capital team that we have under contract? Again, we opened escrow on this on Friday, okay? So what we're looking for is passive investors to lend money at a 12% annualized interest rate of return. So that is paid at the end of the project, and that is secured by a promissory note, right? So that's backed by a promissory note. And obviously, if you've never invested in real estate, very different than crypto or than, you know, stocks and bonds or anything like that. It's obviously something tangible. You can go and see it. You know where it's at. You could drive it, right? So there's a big difference there. When your money is stuck in the bank, you're getting 5% at best right now. Most of it is much smaller than that. And again, stock market, if you know what you're doing, you're getting pretty decent returns. We think a 12% annualized interest rate is kind of a killer rate right now. And this is the way that the structure would go. So the investment for the property, for this one in particular, for this project, the minimum investment that we're looking for is $50,000. Oh, I feel like I'm on Shark Tank. I'm looking for $50,000. So minimum investment is $50,000. The total investment that we're opening is for the total project, right? That doesn't mean that we need $1.6 million from each of you, but that would be nice. But the total investment that we're opening is $1.630 million. The return on investment, like we said, the ROI is at 12% annualized. And then the strategy for this is to demo ground up new construction. And I'm going to go through what that looks like right now. Project timeline is very important because if you've worked with developers before, or if you've heard people getting stuck in the city and they're in it for years and years and years, this is one of the reasons you need to go with seasoned, experienced people. We, on the super conservative and go 18 to 24 months, right? We plan to be out of this by 12 to 18 months at the longest, but realistically, let's say 24 months if there was a hiccup and COVID happened and we had another shutdown or something, right? So 18 to 24 months, we are closing escrow on January 4th for this project in particular. And if you were thinking like, how much would I get? I want to do the math on 75,000 if I lend 75,000. There's this little ROI investment calculator on the bottom right. So if you actually do that QR code and you do it with your phone, it'll take you to an investment calculator and you can put in exactly the numbers that we're talking about, whatever your investment amount is, and it'll give you what that ROI would look like, okay? So again, this is just kind of an overview. We're gonna go deep dive in a little bit. So I'm gonna go over some of the numbers of what this looked like and why we decided to acquire this, right? This was on market. This was definitely on market. This is an SFR right now, divorce sale, originally listed at $525. Our offer got accepted at $580,000 and we beat out 7 other offers from developers, right? So when I went to the open house and I had to sign into the registration, I noticed all the other developers that were there. And so I knew because of the zoning of this property that we were going to be in for a fight to try to get it because everybody knows what the value of it is. So that on its face already tells you that it's a great project when you have all the developers in the area looking to acquire it, right? We do have not a lot of projects available. So when something comes up like this on market at a good price, people jump on it. And we were definitely one of the teams that jumped on it and we were able to secure it. So $580,000 is our purchase. Estimated construction cost is $1,155. And that is because we are going to be building 5 units there. And we're going to talk about that real quick. The ARV, which is your after repair value, conservatively is 2.5 million. And again, I say conservatively because comps are all the way up to 2.7 million, but we always do our numbers as conservatively as possible to mitigate risk and to also, manage expectations. Anything above 2.5 is kind of a cherry on top, but 2.5 we know is fully attainable today in today's market. In a year from today, when the project is finished, we completely anticipate that that's going to go up considering the trends of the area. But again, today's number, we're at 2.5. Okay. And then the cap rate, which is a capitalization rate for a project like this, is a healthy 5.7. New construction in 9003 is going anywhere from 5 to 6%. So we always want to be on the higher end of that number so that it's more attractive to a buyer, to an investor who wants to buy and hold this and do this for cash flow, right? So 5.7 is very healthy for the area. 4.5 is low, 5 is average, 6 is great. So we are definitely on that spectrum, that side of the spectrum. And again, your project timeline is anywhere from 18 to 24 months. And this little snapshot that I put there is Zima's. So that is a snapshot of what that property looks like, right? Okay. Going on to the next page. So this is the plan for this property. And again, these are renderings that you see on the right side here. So we would build a 4-plex here plus an ADU. An ADU is an accessory dwelling unit, right? So we would completely demo existing structure. We would maximize the LARD 1.5 zoning to build 4 large units consisting of 4 bedrooms, 4 bath, and 1 ADU that's a 2-bedroom, 2-bath. Now, why do we build this, right? When we look at highest and best, you could build bigger, right? We could build 5 bedrooms, you can build 6 bedrooms. But when you get to your cost of construction versus what you get for rent, it starts not making sense, right? It's the law of diminishing return. We're going to get to a point where you overbuild or you over design something and then you don't make money or you don't make as much money as you'd like on it. And so you have to hit that sweet spot. And again, the analysis that we went through, this is the sweet spot for South LA in particular. Every market's different. We would analyze it completely different if it was a different area, as you'll see with project number 2. So for this construction plan, this is 2 duplexes, right? So the proposed plan for this is your front duplex is 2,800, your back duplex is 2,800, and your ADU is 1,000 square feet. So total livable space is 6,600 square feet. I don't want to lose anybody with these numbers again, but I just want to give you an overview, right? So when you retail this, your price per square foot is $378. Again, when you sell multi-units, price per square foot is very important. And the average is in this area is $350 to $450. So we don't want to be on the low end and we don't want to be on the very high end, right? We don't want to be the anomalies on each end. We want to be somewhere in the middle where people feel like it's still a really great deal, but they're comfortable with the comps, right? We know that we definitely can hit that comp with no issues with appraisals and those kind of things, right? So that would be our exit at 378. So why can we get what we get in South LA? Because a lot of people think about South LA and go, why would you build something like that there? And this is why, the pro forma rents, okay? So for a 4-bedroom, 4-bath, again, I'm being super conservative on these numbers, $3,500 for rent is low for a 4-bedroom, 4-bath in South LA. Most of them are getting closer to 4,000, 3,800 to 4,000. So we went super conservative and said, okay, 3,500 times 4 unit, you're at 14,000. I hope everybody's following me here. Your ADU, a 2-bedroom, 2-bath, again, conservatively, because market shows that they're closer to 25 right now, 2,500 a month. We're going to go with 2,000 a month. So when you add those two things up, you come up with $16,000 a month in rental income, okay? Then what we do is we reverse engineer it to get our exit price on this. So once you take into account your taxes and all your expenses and everything, then we come up with where our 2.5 million came from. So these are renderings of possible designs. So again, these are some of the buildings on the left-hand side here of things that we have built. But very typical, if you've been in South LA recently, you see a lot of these, and there's a reason for it. It's because the city approves certain things and knows what they're going to push through, right? So as developers, we have to look at it as the path of least resistance. You can have a great design and you can be, again, over designed, and it makes no sense because you need to get this approved. So why not go with, things that we know that the city is going to approve to make the process as easy as possible? That's why we work with certain architects as well, because they have relationships with plan checkers to make sure that we can get these things through as fast as possible. So the project analysis for this, and again, some people love to see numbers, so I gave a very quick snapshot about this. This is definitely not all encompassing when it comes to the numbers of a project, but this is kind of the summary. The exit price is 2.5 million. The projected profit is 765,000. And this is the reason that when you do multi-units in lower income neighborhoods, what's called Class C neighborhoods, you're looking for a return of over $500,000 for it to make sense, right? So 765, again, conservatively. The GRM and the pro forma GRM, those are the gross rent multipliers. Those are 13. Your cap rate, like I said, is 5.7. So your price per unit is 500,000 and your price per square foot is 378. So we already went over that. So 5 units would go on this project. The lot size is 6155. The building square footage is 6,600 square feet and it's already 1.5, right? So the important thing for us is that we know how to construct at a lower price per square foot, which again helps us make sure that we have a healthy margin in our profits. So our construction for this per square foot is $175 a square foot. So when you multiply all that out, that's why you get your cost of construction and what the cost of the project is. So the cost of the project is $1,735,000, 2.5 minus that, that's how you get your profit, right? Your estimated proposed project, your projected profit. So I'll leave this up just so you guys can check it out real quick, but this is how we get to the numbers, right? And again, a real simplified form of how we do this, but this is how we get to the numbers. Obviously there's permitting and there's all these things, but that all goes into construction cost per square foot. We're kind of putting it all together on this simplified form. Okay, so property location, again, 9003. So 9003 is, oh, did somebody say something? Or are we good? Oh, I think we're good. Okay, so if you're unfamiliar with the area, then these numbers will make sense. You're about 10 minutes from USC. You're less than 5 miles. You're only 4.5 miles. So what does that tell us? Being this close to downtown and to USC is that you have a large population of renters that need to be close to those amenities, right? Again, we want to see that. We want to see the demand that's there. LAX is only about 12 miles away, Santa Monica 18, and then Orange County from there is only about 25 miles, right? And the fun facts about this zip code, obviously, and with multifamilies in general, is that they continue to be a very secure asset because you hedge against the market. You hedge against anything that could happen. If there would have been a crash, which I still don't think there's going to be, but if there would have been a crash, rents don't necessarily crash, right? Home prices do. So when your multifamily is secured by rents, then you have just by nature a more secure asset. Unless you're in a very, very good neighborhood, then you are hedging against that market in a different way. So with this one being in a lower middle class neighborhood, classy neighborhood, you want to make sure that there's other things that support it. And so the home prices in this area, home prices alone have gone up 5.6 year after year. And then this area is 33% higher than the national average. I mean, we all know how expensive it is to live in LA and Orange County, right? So in Southern California, we are very used to that. We know that those are the realities of living here, right? This is actually really close, not really close, it's directly across the street from a school. So this is great. It's a magnet school too. We've built stuff on the other side of the school. So we know this area very, very well. Okay. So that was project one. Okay, so project one was a multi-unit, 4 units plus an ADU, so 5 units. That, if you want to invest capital, is one opportunity. So here is the second opportunity, because we put in 3 offers, 2 of them got accepted, and we may have a third one that gets accepted tomorrow. So we have lots of projects coming in, lots of opportunities for you guys. And this one is in Culver City. So this is 11838 Marshall Street. So when we talk about neighborhoods in particular, Culver City is definitely a Class B, Class A neighborhood, right? This kind of borders on it. This particular pocket is right by Mar Vista. And so it's on the west side of the 405. That's important to know because, as you know, Los Angeles real estate, if you get to know Los Angeles real estate like the way I do, there are certain pockets that once you cross over, you know, certain streets, all of a sudden you're up another $1 million. I mean, it's pretty insane. The pockets that happen in LA is literally, you know, neighborhood by neighborhood in a lot of these things. Oh, okay, good. So this one, this is what's on it right now, is this single family home with, you see the driveway to the left and stuff, right? And this is on a street that has a cul-de-sac. It's not all the way at the cul-de-sac, it's about halfway down on the cul-de-sac. See here. So again, here's your calculator if you want to do that. So this is an example, the picture here of a property that just sold in Culver City. Okay, so these all the photos and stuff that you're going to see from here on out for Culver City is things that are on the market right now or that have just recently sold. This would also be ground up construction. So same thing, 12% annualized unless you stick around for the bonus at the end here. And then this, the reason that we decided to take this down is this because it's actually 9,400 square feet. This is one large lot that when we looked at the parcel map was actually 2 lots. So what we're going to do for this is that we are going to untie the lots, and I'll go into that in detail right now. So same thing, minimum investment of 50,000 for this. The total investment for this is 2.2 million, right? This timeline is not as expensive because obviously we're not doing as many units, and these permits are a little bit more streamlined. You don't need to go through all the things that we have to do when it comes to multifamily. So 12 to 18 months, again, super conservative. We hope to be out in 10 months or less, but 12 to 18 is more realistic, I would say. But we are going to push. We are going to push to try to get out of there as soon as possible. And our target closing date for this project, or for this escrow, is also January 4th. Okay. So let's go over the details of this one. So here is the parcel map. If you see it on the screen right here, that yellow is the 2 properties there. So right now it's one large property, but that little Z in the middle means they're bracketed. So when they're bracketed, it means that you can untie them. Okay. So this was on market at 1.299 million. Again, we came in right at offer price at 1.299. We beat out 6 other developers for this project. Again, based on our experience and my conversations with the agent, she was like, okay, you guys know what you're doing, so let's do this. We also do a lot of due diligence before we acquire a property. So we call the city 3 or 4 times. We talk to different planners, different zoning, to make sure that we could untie these lots and we can build what we want to build on them. So at this point, 650,000 per lot is what the cost is. Our construction cost for SFR and ADU, a single family home and an accessory dwelling unit, is 450. Our ARV, or what we would plan to sell these are conservatively, is 1.7. And again, project timeline is 12 to 18 months for this. And these are ground up spec homes, right? Basically, we're going to do ground up. This is another property that was a couple of blocks away that is that was sold, if I remember correctly. This one's a sold property. So what you notice is that you don't want to build something that doesn't look like it's part of the neighborhood, right? So if what's sold for top dollar is there, we want to replicate a lot of that. Obviously, the city also allowed these to be built, new construction. So we take cues from that and we build to what the city already approves. And so for this, SFR and ADU, single family and a accessory dwelling unit, completely demo the property because this house right now sits right in the middle of the lots. So it's no good to us. We're gonna demo that. We would build a 1,600 square foot front single family home, and then we would do a 500 square foot ADU on each lot. And again, why not maximize and do 1,200 square feet, right? Because it's diminishing return again. It doesn't make sense. You're not gonna get that much more for the build by going that much bigger, right? So this is a sweet spot that we've figured out. So each lot A and lot B would have 1,600 plus the 500 square foot ADU. So a total livable space of 2,100. And then our price per square foot for retail is 810. And again, for this area for Culver City, it goes anywhere from 750 to almost $1,000 a square foot, depending on which pocket of Culver City you're selling it, right? So very healthy price per square foot. And you can notice the difference between the price per square foot here, and this is for a home versus a multifamily in South LA, right? So these are some examples of some of the new constructions and some of the things that are on market right now. This one on the bottom right is actually the ADU behind the one on the left. So this is super modern on a corner, and that one's only 3,800 square foot lot. So that's actually a very small lot, and they were able to maximize with these weird angles and everything. It's kind of cool. I believe they are on the market for a little bit over 2 million at this point. And then these interiors, again, you have to know your market. The interiors, the pocket doors, the whole sliding doors all the way through, you know, it's a step above in the luxury, but not super luxury of the amenities that you have to design for this kind of neighborhood. So here's the project analysis for this for all you numbers people. So this one's pretty basic. Again, 1.7 is our exit, right? The projected profit per lot is 598. So this one will make over $1 million in profit between both lots. Price per unit, because there's 2 on each lot, is 850. And your price per square foot, like I said, is about 810, 809 on this, right? So 2 units. One lot size is 4862, the other one is 46 and change, right? They're both right around that. The building square footage would be 2,100. Let me talk. This is not opportunity or rent control or anything like that, and it's a regular R1 lot. So our price per square foot for construction is a little bit more expensive for this because again, your finishes are different, your design is different. So even though it's not a multifamily, our prices go up, right? So it's about 215 for this. And so the cost of our cost is $1,101,101 all in between the lot and the construction per site, right? So that's why it's $1 million or 222 that we need to fully fund this project, right? So that's what we're going to need, whether it's hard money or private money, all of our lovely investors that are on. That's where that number comes from, right? So fully funded project is at 2.2 million for this. Okay. Take a screenshot, do what you guys got to do. Okay, here we go. So the property location for Culver City in particular, like we talked about, I'm looking at my time, good. Okay, so for Culver City, 90230, downtown Culver City is actually a huge draw right now. That's less than 2 miles away. So Culver City has everything right now, right? It's got all the tech hubs, it's got Amazon studios, it's got Netflix studios, it's got a ridiculous amount of stuff going on in Culver City. Erewhon is there, you know. So the bakery, what's that really famous bakery? So everybody wants to be in Culver City or adjacent to Culver City. So being able to find a lot for under $1 million in Culver City is is significant, and being able to find it at 650 is almost unheard of. So UCLA is the closest university, only 7.3 miles away from here. So again, you want that kind of rental income if it comes down to that, or people that are graduating, USC alums, that kind of stuff, who are looking to stay close to their universities and buy. Downtown LA, 12 miles. LAX is only 5 miles away. So it's very, very convenient. Venice Beach is only less than 4 miles away, right? The big thing with this is that you border Mar Vista and Culver Gardens. Again, Mar Vista is your big one because now those price points jump up into $3 or $4 million for single family homes in Mar Vista. And then Venice, kind of the same thing. Those are multi-million-dollar homes. So the median home prices I thought was really interesting in Culver City was 1.5 last month. And it was up from 57% from last year. I had to check that number like 3 times to make sure that it was accurate. I was like, what? But yeah, it took a huge jump in the home prices. So normally 1.2 million to 1.5 is condos right now, townhouses in Culver City. So again, I think 1.7, we're being super conservative for our exit. And then the median sale price per square foot in Culver City is $818. We're at $810. So again, we're right under the median, not on the low end, not on the super high end. So we know that we can get our comps for sure, right? And that's up 18.6% then from last year. That's bananas, right? So what does it look like if you were to invest with us, right? And I'm just going to take the minimum investment that is a $50,000 example, right? So the rate of return, like we said, is 12% annualized, right? And for the first project, like our timeline is 24 months. Now, the good part is the longer that we take, the more you get paid on your investment, right? So the calculations on this, if you take 50,000 times 12, right, that's 6,000 or 12%, that's 6,000. When you divide 6,000 divided by 12 months, that's your $500 for every month. So $500 times 24 months, which would be the timeline for this project, would be 12,000. So that would be your total return if we spent the 24 months in this project on a $50,000 initial investment. Okay, I hope I didn't lose anybody there. So that's why some people are visual, some people are audio, right? And some people need to write it down in order to kind of fully get it. So I wanted to make sure I did it and everything. So like I said, in simple terms, the longer we take, the more you make, because your investment is basically earning $500 a month at this point, right? Compared to like what we talked about, a normal savings account that gives you almost nothing in annualized returns. So for this one, you would make a total, for this example of 50,000, you would make a return of 62,000, right? At the end of 24 months, right? And again, use that investment calculator that I gave you guys. And I can always go back to it if we need to, so that you can see what your return would be. But this is a really simple formula to kind of figure that out, okay? So I get asked a lot, I want to invest in real estate, but I don't know where I'm going to get my money. And they don't realize that they can use all these different sources, or that you guys can use all these different sources as a point to get your money out to invest in real estate. So here's a couple examples, right, for private money. Obviously, cash and checking accounts. If you bring me a bag of cash, we might have questions, but your cash or your checking account, right? Your IRA or self-directed IRA, your personal savings account, or if you have a trust fund, you can do a HELOC, a home equity line of credit. I was actually just speaking to one of my clients about this because he's sitting on $1 million of equity. And I was like, we need to put that to work for you. It's just sitting in your house. That's not making you any money, you know? The business equity line of credit, you can also do that into real estate, or you have a solo 401k. Okay, so these are all sources that you may not have thought of, that you say, I have access to these things. I can tap into that to invest into real estate. So here are some common questions and answers. Okay, so I'm just going to go through these real quick. Maybe these answer some of the questions that you had right now, and then, you know, we answer this. So why should I invest, you know, in a property? So again, South LA is going through huge transformation, right? It's almost unrecognizable from where it was 10 years ago, let alone 5 years ago. I can't even imagine what the next 5 years are going to be. So the proximity to USC in downtown LA, and again, Culver City is always going to be a good investment just because of the trajectory of where that's going. I mean, a 50+% return or year over year growth is bananas, right? So how will the property and my investment be structured and documented? So all investors hold a promissory note on their investment, legally binding. It states what your investment is, what your return on investment is. Queens Venture Capital, we prepare all the documents and both parties sign the documents, okay? And as a passive investor, what do you have to do? Nothing. That's kind of the beauty of this, right? Is that if you want to be a passive investor and you just want to see your money grow, then you can be secured by giving we give you updates. And again, we're transparent on this and we handle all the day-to-day, right? We already talked about 12% annualized. Will you get updates on what's going on in the project? Definitely. We want to be as transparent as possible. And like I said, some people want more information than the others. This will more than likely be weekly or bi-weekly updates, whether it's a webinar or something that we post and we send out to our investing group. Then the other question is how and when am I going to get my investment money back? So we talked about this. The timeframes for each of the projects is anywhere from 18 to 24 months, if not sooner. And at the end, when we either refinance or sell the project, you would be paid out first, right? So you're returned first prior to any Queens Venture Capital or 53 Case LLC receiving any profits from the sale. So what are the risks? Now, this is an investment. There is always risk with investments, right? I don't ever want to say that there's not. What if the property doesn't sell? What if it doesn't hit the projected things? In that case, we always make sure that our investors get paid. They get their 12% back no matter what. If we have to refinance, if we have to cash flow, if we have to Airbnb, whatever we have to do, we'll make sure that our investors get paid back. And that's why you have that promissory note. And I have gotten asked this before. What if, I need my money back sooner? What if I need it? There's an emergency. And we completely understand that that's sometimes a barrier. Really, we need to make sure that you're repaid when the project is complete because those funds are being consumed and used during the project, right? But if things were just bad and we needed to talk about it, then we could figure out some way to discuss an option to return your capital if that were, dire circumstances. And when do I need to make a decision? This is the important one. Today. You got to make it today, right? On December 22nd, what time is it? Somebody clock me. What time is it? At 6:52, you need to make a decision if you want to do this or not. We are currently in escrow. Like I said, I'm kind of joking and not joking, right? Because we are in escrow. We need literally to know that you are committed by next Tuesday. So if you said to me today or this weekend, hey, Sonia, I'm ready to go. What's the next steps? We'll get you there. Once we raise what we need to raise, we will close it. We will close the raise for these projects and you will have to wait till the next project. So just keep that in mind. We anticipate with the network that my partner have that we are going to be able to raise the money. So if we end up getting what we need, we will close the projects and we're going to have to wait for the next one. Okay, then what will my investment be allocated to? So it's going to be allocated to different parts of the project, right? So some things will be for purchase and acquisition for the renovation and holding costs or construction costs, sometimes for the sale of the project. So again, super transparent. We'll let you know where those things are going. How do you get taxed? We are not tax professionals. Always talk to your tax professional. As far as we know, it does get taxed as ordinary income. This is why you need a good tax professional to try to shelter you as much as possible. You'll receive a 1099 form from us at the end of the year or at the end of the tax season. What are the logistics and the process for my investments? So again, we prepare all of the legal documents that you need. as soon as possible. And then we will send out wiring instructions and we go pick up checks, you know, anything that you feel comfortable with on how you want to proceed, we will facilitate that. And then again, you'll be repaid your initial investment plus your 12% annualized in the property when it's sold or refinanced, right? And then, you know, you're ready. You're like, that's it. Sonia, I'm ready. I have more questions. Who do I need to contact? So you contact me basically, you know, and you say, I'm ready to go and let's do this, right? So that's how we do that. And we're here obviously to guide you guys, right? And to give you a good opportunity that's backed by all the experience that we have. Mission statement, right? We want to create a legacy. We want ordinary people to have access to something, like I said, that is that for most part has been inaccessible. And that's probably the most excited I am, because when people are like, wow, you've been doing development for 8 years, I see the small circle that has been involved in it, and it never grows from there. And I'm really excited to see that grow. So here's the next steps, guys. And then we'll go into the bonus exclusive right after this. So this is an opportunity. We share it with you, right? We'd love to discuss it further if you still have more questions. And again, we'll do any questions right here. Here's my contact information for this in particular. So if you don't have this, oh, that's not the right number. Don't put, I just realized that that's not the right number. Don't call that number. So I'll put the right number up. Sorry guys, that's not the right number. Don't put that one. But that is the right email. Okay, so you can always send me an email. Just realize that. Don't put that number down. Okay, so here's the exclusive. I'm so excited about this. The exclusive mastermind bonus. So again, I would say at every networking event that I go to or that I present at, I constantly get asked, how do I do a project with you? How do I partner with you? Considering how busy we all are, I would love to just do a mastermind, but the reality of what masterminds are there for, like it takes time and effort, right? But the reality with ground up new construction is that you can get taught how to do it on paper and still not understand it completely. So the exclusive mastermind bonus is this: learn, earn, and execute. Okay. So most programs charge you anywhere from $25,000 to $100,000 for the really, really good masterminds, right? You learn a new skill, you're paying for a seasoned mentor. It's a shortcut. It really is a shortcut, right? Because you pay for somebody's skill, their knowledge, their network, and their experience. And what would you do if you can do that plus get a return and get the skill set, right? So now you're not just paying for a mastermind, you are actually walking the walk of what you want to do in the future. So like I say on here, YouTube University is great, but there's some things that you need to experience in reality to really master, right? So this is the opportunity for exclusive mastermind bonus. And for this one, I am capping it. I am only capping it to 5, okay? Because anything beyond 5 at this point, I just don't have the bandwidth for it. I don't have the capacity for it. So the minimum investment for a mastermind bonus, if you wanted to become an investor with us, is no longer passive. It's $100,000, and your ROI does go down to 10% versus 12%. And the reason it does it is because you're getting the mastermind. You're getting me, myself, my team, and my efforts and my knowledge. So you are getting less investment, but you are getting all of our experience, right? So what does this include? This includes a weekly project flow meeting. This includes on-site project managing if you're desired and you have time to do those things. Because again, project managing is time intensive, right? So if you'd like to be on site, that's going to be an opportunity. Bi-weekly group webinars. The list of the resources and vendors that we use, that on its own is super valuable. You can choose whether you want to do the single family home or the multi-unit project. So I don't want you doing both though. You need to choose one to move forward, okay? Bi-monthly one-on-ones with me to go over any potential projects you have. So we can meet twice a month and go over projects that you've identified that you say, hey, is this a good development project? And we'll go over how to run those numbers. Possible partnerships with our construction crews. So if you find a great deal and you're like, hey, now I'm ready to take something down, then we can partner with you on that with our construction component. And so that's all the exclusive mastermind bonus. I'm really excited about that because I've never seen anybody offer that, right? We've seen private money raises. I love hearing everybody's excitement, but I went, what if we can offer something else, right? What if I can offer somebody an opportunity to walk through what we do from A to Z if they want to? If you want to be passive, I'm totally okay with that too. But for those of you who said, I want to do this, this is the opportunity to do it. This is the best way, honestly, for you to do it. So that you actually learn how, instead of just on paper, get told how to do it, right? Okay. That was a lot. That was a lot to go through, and I went through that pretty fast. All right, now we are going to go through questions and answers. Hold on. Let me, how do I get back to, oh, stop share. Here we go. Okay. Whew, that was a lot. We have 24 people in the group right now. So not everybody at once, but unmute yourself. If you have a question, shoot guys, go for it. If anybody has a question. I'm looking. You have to unmute yourself though. Jay, is that your hand up?
Sonia,
Yes.
can you send me the breakdowns on both of the deals? I want to refer some investors to you.
Yeah,
I
that
got
was
some
great.
guys because what happens sometimes with I know some of the other guys had this problem too. We don't have a project for an investor, so they still need somewhere to park the money. And it's a lot of people out there right now that they getting killed and they're tired of dealing with the bank. They're not making no money whatsoever. And if you're not making money, you spending money. You doing one or the other. There's no such thing as saving money. That's a secret, guys. Don't tell nobody. There's no such thing as saving money. If it sits, it's like a piece of cake. You're gonna pinch it and pinch it and pinch it. So email me the packages of both of your deals, and then so I can send them over to a couple of guys. That Culver City one,
Yeah.
that's the one.
Yeah, Culver City.
You got 2 lots for $650 a piece in Culver City. Man.
I'm telling you.
Yeah, that's nice.
Gregory,
nice.
and because you wholesale properties, you do this, you do and you do highest and best, and you analyze it. These are good deals. These are really.
That's a good. The Culver City is a no-brainer.
Yeah.
The other one is a great deal too because of the rents.
Right.
And
Yeah.
Section 8 just raised the rents. You got new construction. You got 4 and 4, 3,500. That's easy. That's a no-brainer deal too. But that Culver City is really attractive just because of where it is. And I know that area and the houses that they're building over there. It's, oh my God. As fast as you can get it built, it will be sold.
Yeah, I definitely don't have any doubt there. And
Not-
I definitely want to ask if there's anybody on our webinar tonight who's ready to go. And if there's not, it's okay. You're not going to hurt my feelings, but it's, well, you're going to hurt them a little bit. But if you would like to participate, I would love for you guys to say me. ¿Quién dijo yo is what you say in Spanish. Who said me, right? So either a hand up or unmute yourself, or send me a message. I'm okay either way. You don't want to be all public about it. But like I said, I'm excited about it. We are going to raise very quickly. Like I said, we're in a time crunch. We're in a short escrow. So it's something that is going to happen very fast. So Gregory, I will send you everything today. Not a problem.
Okay,
I have
thank you.
your email. So I'll send that over and then, yeah, share it, and I'll be available all weekend for if anybody wants to jump on a Zoom or needs to meet with me personally or wants to jump on a phone call. Is there any other questions or comments? I hope I covered everything okay. Did anybody have any feedback that they'd like to share? Looking. I can't see all 23 of you guys.
I think it was great. It was a good breakdown. All the info was like right in the little slides, which is nice.
Cool. I'm glad. Like I said, I know the numbers sometimes get a little overwhelming, but I want people to understand what they're investing in. I don't want to just be like, hey, I have an investment and I have 8 years of experience. Come join me. Like, you need to have a little bit of background on it, whether you want it or not. A little bit of background is going to help you to at least be informed. So thank you. Yeah. All right, guys, if there's no other questions, now's your time. I'm telling you, ask now. I was trying to get out of here by 7:30. I see people logging off, so that's good. Because I know everybody's got lots of stuff to do. I know Christmas shopping, holiday shopping, all of that good stuff. So I didn't want to keep you guys longer than I had to. Okay. So I think we're good unless I don't see anybody else with questions. Okay. I think we're okay. All right, guys. So thank you so much. Again, if you want, oh, somebody did send me a message. If you want the slideshow, because you're interested in the investment, please let me know. I'll get over a PDF to you. And like I said, not this one, then maybe on the next one. We are constantly going to be getting projects and partnering with all the people in our network who need ground up construction crews. So we would love to talk to you guys about all of those opportunities. All right, guys. So have a safe holiday. I will see everybody. Stay dry. I hope it stopped raining where you're at, and send me a message if you want the PowerPoint in a PDF form. Okay. Thank you, guys.
Bye. Thank you.
Bye, guys.